Yum Brands reported earnings earlier this week. The quarter was plagued by a chicken supplier issue in China. This wasn't new news, and management definitely tried to explain it, but Stephanie, there seems to still be an issue with the visibility on this problem. So what's it going to do to the stock near term?
Well, I think it's going to take a while to get sorted out. If you listen to the call, the CEO Novak was very clear that they don't really have a lot of visibility. They don't know if this is going to get worse before it gets better. But what we do know is back in 2005, when they had an issue, avian flu and Sudan Red, they did have negative 40% comps at KFC. And they did see operating profit decline that year by 5%. But the following year, you saw a big recovery. So if the company can do a good job at kind of managing the social aspect, right, and in terms of building back their credibility, which I think that they will, I do think that the stock offers value down here.
Okay, and they also reaffirmed that they are going to open 700 stores this year and next year in China, despite these issues. Do you think that they should be taking some of their team and having them focus on this social issue?
No, and I'll tell you why, because the growth really is, for them in China, it's 42% of their operating profits. And so they actually were very clear on the call and said, we could have not announced such negative numbers, could have made it up and made the numbers this year look less bad, but they really don't want to sacrifice that long-term growth. And I think that they want to continue to dominate China, which they do. And so again, I think it does take time, but they're going to spend $400 million in a marketing campaign and in promotions and really getting the word out there as to what happened and what they've done since then to fix the problems and to make sure that it doesn't happen again.
Do you foresee any issues with the dividend or share repurchases
because
of this?
No, and I'll tell you, what's interesting is if you look at the other parts of the company, YRI, which is their international business, India, US, all were a little bit better than expected and driving significant sales. So I think that the other parts of their business are really good, right? And the company is very committed in terms of shareholder value, and they just raised the dividend 8 consecutive years. Before this, they had double-digit earnings growth, 11 consecutive years. So I think that this is a company that has a very good track record. And as I say, Novak, the CEO, is excellent. And I was pretty impressed, at least at hearing what they were going to do to fix the problem. They're very humbled, which was also expected, but good, so that they're driven to drive better results going forward.
Now, last time we spoke about Yum, it was before the earnings. You said you like the stock under 65. Here it is. Are you a buyer?
Yeah, we've been restricted this week because obviously it's been a hot topic in the press. But when we can, we will definitely be buying closer to 60.
Okay, Yum, closer to 60.